Asia's wealth tech is shifting to unified platforms as portfolios grow more complex. McKinsey said Asia Pacific onshore financial assets could reach $81 trillion by 2027, generating about $1 trillion in revenue. To expound on this, we have James Werner of BlackRock. So, James, welcome to the program. What is driving the shift from product sales to portfolio advice?
The big drivers can be broken down into three key areas. One would be overall client sentiment or expectations, and that's really around the client wanting a more holistic conversation. To think about their whole balance sheet, think about their portfolio risk, think about their financial goals, maybe even sort of liquidity across the entire portfolio. And that makes it very hard to sort of really pick it apart as a product conversation. It really now needs to focus on the whole portfolio. I think another driver is really linked to the first point, which is that the portfolio complexity has outgrown the product conversation. There's so many factors to consider. It could be geography, it could be asset class, certain vehicles that they're invested in. And so really the need has really driven now to a point where the end client is expecting a more holistic conversation across the whole portfolio. And I think maybe one other thing that's worth touching on is that the industry, so the wealth managers and banks are increasingly needing to scale their business operations. And doing that on a product by product transactional basis is incredibly hard to achieve. And actually taking a sort of portfolio approach on a personalized individual basis at scale, leveraging some of the newer technologies available, is really the only way that the wealth managers and banks can deliver against those earlier mentioned customer expectations.
But on private market growth, why does it make transparency more urgent?
If you sort of step back for a moment on private markets, what we've seen over the last couple of years is that the investors into private markets has expanded beyond the initial wave of just institutional investors. And as we move into that segment, into wealth management for private markets, transparency on data, having the ability to compare one investment opportunity against another, thinking about the cash flows and valuations, that level of transparency is critical when you think about building trust and confidence with the end investor. And in public markets, of course, that data is readily available. And so what we're really focusing on at BlackRock is providing that same sort of data and resemblance of data in public markets into the private market space. And so transparency is absolutely key in what is something perhaps historically been more opaque. And when it has that opacity and less clarity around those areas that I mentioned, it's harder for people to allocate to something they understand less.
So would you say generative AI would have a role in this? And if yes, where can it add the most value for advisors?
I think the first thing is there's no lack of data in wealth management. There's no lack of data available across different markets. But it's very hard sometimes to synthesize that data into something that's useful, creates personalized insights for the end client. So first area we're seeing a real impact in a positive manner is to help advisors, help wealth managers and banks create personalized insights from a larger range of data that's available on the market, both public and private market. The second one is it's making it easier and easier for wealth managers and private bankers to use very powerful tools, but in a much easier fashion than before. So the introduction of auto commentary to provide insights at individual customer portfolio level. This is now being done at a click of a button, whereas something that was either impossible to achieve or would have taken someone in one of the teams many hours to try and get even close to perhaps what's now possible through platforms such as BlackRock's Aladdin Wealth. And then the final area, I would say, is advisor capacity. It's a well-known challenge that most advisors and bankers spend at least half of their time, in many cases, preparing for client meetings, preparing for reports, running the research. And that's valuable time that could otherwise be spent in front of the client. So really, if we can reduce the time spent, or if generative AI can reduce the time spent preparing for those meetings and freeing up time to spend in front of clients, that's clearly got to be good for those businesses. So I would talk about really and think about advisor capacity, access to very powerful tools that are easy to use, and then taking a range of data that's available and very quickly synthesizing it into meaningful insights that are helpful to that end client.
Thank you so much for sharing your thoughts, James. Hope you can join us again soon.
Says thank you.
Thanks, James. Once again, that was James Werner, head of Aladdin Wealth Tech for Asia Pacific at BlackRock. For more news, visit asianbankingandfinance.net.